Good afternoon, all. Thanks for joining us here, and for a very exciting session with a lot of insights, which I'm sure everybody will find useful, and also looking for your questions and comments as well, which we can tackle as we go through the session. And I welcome my two panelists, John Mann and Barnaby Nelson, and we'll start with a quick introduction. So, John, let's begin with you.
Yeah, thanks, Harry. So, John Mann, I work at BNY Mellon, and I've been with the company for 30 years. I'm based here in London, but I have responsibility globally for all of our bank, broker-dealer, and insurance clients, and as such, work incredibly closely with Harry and the rest of the team at Standard Bank. So, really looking forward to the session today.
Thanks, John. Barney?
I'm Barnaby Nelson. I run the Value Exchange, so a market research firm specialized in the post-trade space, and not in the same bank for 30 years, but certainly spent many happy years of my career in custody banking. So nerdily interested in everything that is post-trade and cross-border investment flows. So very excited to be here, Harry.
Thanks, John and Barney. So let's kick off. So first thing is that I think the first question since we launched this project was saying that why we are doing it, what's really the objective is, and to be very in a brief, basically we are seeing a lot of conversation about Africa, either in the region or globally, with clients, with policymakers, with infrastructure, like forum like yourself, TNF, where we have regulators and infrastructures and investors all are presented and having a conversation. I think the one main objective here is to do something across the region, across the different category of investors, and really bring a data-driven approach to understand what the investors are saying when it comes to investing in Africa, in terms of their interests, in terms of their challenges and the drivers, and then using that data-driven approach to really drive the conversations further. So that's the primary objective, and with that, we are so glad in Standard Bank then to work along with the Value Exchange, who has actually been executed the whole project and running with it, BNY Mellon, SAFCA, AFCA, MEDA, Global Custodian, to work on this. And we're so encouraged with the huge response which the survey gave, which shows that the interest people have in discussing about these issues when it comes to Africa. So, and what we broadly see is that, and then we'll go through those findings, is that, and a lot of it which is coming out in sort of what resonates with the discussions we are hearing, either in this conference or the individual conversations when we have with the investors across the region. So with that, what we'll do, Barney, I'll hand over to you just to do a quick recap on the key data points coming from the survey, and then we dive into some themes coming from the survey.
Perfect. Thanks, Harry. Yep, excellent. So I'm just going to share my screen. So yeah, just a very quick scene setting to your point, Harry, around the survey itself, and what we learned from it. I think, as you say, what was fantastic about this is that, on a global basis, there are many markets and many topics that tend to steal the show, I think, from a kind of discussion perspective. But actually, one of the kind of leading points of the survey was just how huge the feedback was that we managed to get from investors and intermediaries all over the world. So 225 firms responded to the survey and have been kind of consistently sharing our views. But as we've seen as part of the project, what's also been fantastic is the number of kind of detailed discussions we've now had in partnership with BNY Mellon, MEDA, AVCA, SAVCA, and obviously and through Standard Bank. But the number of working group conversations that have really helped to draw out a lot of the stats and figures that we've got here. So it's been a much bigger project than I think even we expected in terms of feedback, which is always really exciting. What did we learn? I think the top 5 points I'd really underline. First of all, that Africa flows obviously vary around the world, but I think if you, in the context of kind of foreign investment flows, the consistent kind of axis between North America and Europe comes up over and over again in terms of the fact that it's actually two quite distinct conversations in terms of drivers, challenges, and ultimately volumes. But as you can see here, from a European perspective, Europe kind of leads the way really in terms of foreign investment flows into Africa. North America slightly behind, but hopefully as we go through this conversation, we can expand more on exactly what the nuances are between those. In terms of who is investing, a quick point on the fact that it's really institutional investors, so long-term, stable investment flows are really the backbone of the Africa story at the moment, both on the portfolio investment side, so big pension funds, and then on the direct investment side, development finance institutions and so on and so forth. Very large, chunky AUM, essentially making up much more of the investments into the region than hot money flows. And what's driving that? Again, we'll expand on this, but I think for me, what's interesting is that ultimately, first of all, the risk return play is obviously key in both, in pretty much everywhere around the world. But behind that, there are different reasons for investing in Africa. So Europe, much more of an ESG impact lens. North America, much more of a diversification lens. So there's much more to Africa, I think, in terms of the portfolio, the value to the portfolio, than just the returns that you're going to see. Now, for me, I think, and chatting through this, I think one of the most optimistic things is about the whole Africa story is how much upside there seems to be, both near term and longer term. So one of the questions that we broke down was ultimately, where is everyone in their investment journey into Africa? And as you can see, I think there's two key stories within this. One is that there's about a quarter of the people we reached out to, or about a third, are in Africa today. A quarter of them have headroom in terms of being able to actually grow their exposures, and we'll dig into why that is in a second. But also, the fact that 44% of the market is keeping an eye on Africa today with a view to getting in. One of the key questions is ultimately okay, what can we do to support those? But of all the things that would drive the Africa story the most, the investor education piece and bringing that 44% through the pipeline, if you like, is definitely the single biggest area of kind of opportunity. Now, in terms of where the money is landing, I think there are many ways to read this, but ultimately, the 2 points I'd make on this part is as somebody said a little while ago, 10 years ago, Africa was a South Africa plus story. But as you can see, that the story has diversified significantly into, multiple markets now, with differing ranges of opportunity. And actually the last couple of years, or the experience from the last couple of years, pointing perhaps away from the top couple of markets towards others. But ultimately the Africa story now is much bigger than just South Africa plus. It's South Africa, Nigeria, Kenya, undoubtedly, plus some serious growth from many of the other markets. Now, the two, I suppose, one of the biggest surprises actually is why people are investing into Africa, and I think this digital infrastructure theme comes through consistently, which is the fact that basically that technology and fintech stocks and infrastructure to a large degree, as you can see, are large drivers of basically of stock picking and of foreign investor flows. So it's not really about agriculture, natural resources as much as it is about new tech stocks that are creating the opportunities for investors to take exposures to Africa. Now, I mentioned the near-term upside. I think for me, one of the best things about the survey from an outlook perspective is that you can see that about a quarter of investors that we spoke to have concrete plans to increase their Africa investments this year. So bearing in mind, we ran this survey just towards the end of last year. This for me is an enormously positive sign that ultimately it's not that people are standing on the sidelines and just waiting, that there are really tangible plans to see Africa flows driven this year and hopefully return us to the kind of pre-COVID levels that we saw a couple of years ago. But ultimately, every story has a plus and a minus. And I think in terms of what's holding people back, the biggest point, FX. FX in terms of liquidity, FX in terms of restriction, currency controls, and we'll dig into this much more. But ultimately, those who are in CFX is a major challenge. Those who are looking to come in are still held up by country risk and slightly more macro considerations in terms of macro risks from entering in specific markets. But I think what's really positive about that is that ultimately, when we said to people, what are the biggest triggers for future investments? The main message is ultimately is that the future of African investments is in Africa's hands, i.e. it's local market reforms that are actually the biggest drivers of potential drivers of future flows. So it's not about ratings agencies, it's not about index providers or anyone else. It's really about basically what African markets choose themselves to do to then drive more investment flows. So that's pretty much everything that I wanted to run through on that, just to set the scene. I would underline that all of the results that we go through today are available from many sources, including, I think, Standard Bank, BNY Mellon, and the VX. But the one I can remember very easily is just the vx.io. If you go there, you can download the key findings deck that I just ran through. So there you go, Harry. What do you think? Does that make sense?
Yep, no, absolutely. And just to let everybody know that we'll share the link in the in the chat, so people can go and look at the detailed findings in that. Okay, I think that's great. Let's get into look at some specific areas.
So I guess for me, one of the things that comes out of the research quite strongly is this, the corridors, as we've talked about in the past. So maybe John, to kick us off, kind of had with the BNY Mellon and the breadth of your perspective today, where do you see the big corridors of investment into Africa?
Yeah, no, thanks, Barney. It's really exciting. I think the insights from the survey show that whilst Europe continues to lead, flows into Africa over North America, I think this gap may tighten, and why 76% of the investors surveyed globally are looking to grow their assets in Africa in the longer term. So there's a really strong interest. And then a couple of other points I would just add. A notable finding in terms of the investment corridors is who's actually investing. And what we've seen is that institutional investors dominate the flows, and these are these are longer term investors, and they provide confidence in the stability of flows into Africa, rather than perhaps the portfolio investors, which tend to be kind of shorter term. So kind of on reflection, personally, I think, just not only should we take comfort from the longer term investors into Africa, but it's also encouraging to see that nearly half of the investors are learning up, studying the markets and preparing candidly business cases for investment. And I think this preparation activity is a really positive sign for future growth in the market and in the region.
Yeah, absolutely, yeah. And so I suppose if you think about the sources, and to your point actually, John, one of the things that's really struck me recently is how much emotion there is tied into the Africa story as well, particularly in North America. Actually, the number of people that really back up the desire to invest in Africa, not just by a portfolio view, but actually by quite a strong. There's more of an emotional pull than probably investing into other areas. But Harry, where's this all landing? If John is throwing it and you're catching it, what does the catching look like these days?
Yeah, and I think some good insights there as well. So, while on the one hand, there was no surprise in the sense that the South Africa, Nigeria, Kenya came as the top 3 market in terms of where the people have interest. But I think what was very positive is that you have around 12 markets in Sub-Saharan Africa where you are seeing interest both from strategic and portfolio investors across asset class. So clearly the interest is broad. It's not limited to a set of markets. And in fact, the data shows that the tier 2 economies or especially like the non-resource, non-oil-based economies, sort of attracting a lot of attention, or at least that's what survey says that, and some of it is seen in the actual data as well, what we see on the ground. So I think that's quite positive in the sense that how it's broadening. And the second theme from a driver perspective As you saw, the ESG is coming as a very important topic. I mean, apart from the returns, that ESG is the second most important driver for investors to come in. And it's showing that the Africa is sort of emerging as an ESG destination. And we saw that reflected actually in the audience poll in this morning in one of the sessions, where again ESG was an important point coming there as well. And I think that the other important one for me was in terms of sectors, like the interest people have in terms of fintech and the digital as an investment sector they are going in. It is again something which is reflected in terms of what's happening. And it also shows the shift which is happening in the economies. So yes, it doesn't mean that people are not looking at the health and education and other infrastructure, but clearly the digital, and when we say digital, it's actually, whether it's the fintech, whether it's telecom, and whether it's other infrastructure. So I think that to me is very interesting insight in terms of what people are focusing on, why they're focusing on.
Yep, absolutely, yeah. And I think the reshuffling of the cards a little bit around the economies, as you mentioned, is a really interesting one that certainly I didn't expect. But markets like Ghana and other markets where there's a less reliance on oil and resources, that comes through quite strongly from a few of the working sessions that we've had in terms of strong desire to see those kind of, as you said, whatever they are, tier 2 markets really kind of come to the fore. And John, we talked about the whole European and American axis. As you say, they are kind of narrowing probably in the differences, but how do you see the two conversations playing out at the moment in terms of drivers, challenges, and the whole kind of narrative, if you like?
Yeah, maybe building on what I said earlier, I think Investors Africa strategy today, it's clearly more well established in Europe than North America, with 45% of European investors invested in Africa compared to 32% of North America investors. But in turn, what I would say is we see more European investors, certainly through the survey, have reached their maximum strategic exposure and are currently managing more to a BAU. And perhaps, and again, through the survey, investors appear to be held back by perhaps wider market appeal with, investors citing the economic climate and client interest as a key challenge for growth. But in contrast, the North American position is very different. They have a much higher proportion of investors currently in that learning stage, which I referenced earlier, which and the feedback from the North American investors highlights, the key challenge is more the practicalities of investing, particularly in understanding the regulatory and legal landscape. So I think once this knowledge gap is closed, we certainly may see that percentage difference, Europe versus North America reduced, Barney. Certainly that's my thoughts on that.
Yeah, absolutely. I think somebody said in one of our sessions that I think it's Europe acts with their heart and North America acts with their head, if I've got it the right way around. But as you say, that you've got this, certainly, as the kind of ESG kind of conversation in Europe, but ultimately very bedded in. Obviously, long historical links, time zone familiarity, so on and so forth. But North America, very much, okay, how do we get this done kind of thing seems to come out quite consistently in the survey in terms of the mechanics of it. I mean, on the point of how do we get this done, Harry? I mean, I mentioned touched on the FX piece, but what does, one of the biggest questions about Africa is, okay, what's the risk agenda? So if I'm one of those 44%, I want to go and, open up my portfolio allocation, get a few $100 million allocated to Africa. What do I take to my risk committee to say, okay, look, these are the things that we're going to have to bear in mind, and these are the things that we've got kind of covered, if you like?
Yeah, no, I think that's the interesting one. So clearly you can see the difference in terms of one, by the region as well. So, what Europe investors focusing versus North American, that's one, difference one can see. And you can also see the view from strategic versus portfolio and existing versus new. But I think what is coming out clearly is that the It is the macro issue at this point of time, whether it's the overall economy, whether it's the liquidity, which that is what is really at top of the mind. And if you look at the operation risk or the ease of going into the market, they are not really coming as high on the agenda, and which is I see in a bit positive. It sort of reflects the progress which the region has made over the years in terms of getting the basics right. That doesn't mean that everything is done. Obviously, it's an evolution, it's a work in progress. But the trajectory of the reforms in the capital market infrastructure is positive, in terms of whether it is the upgrades of trading systems, whether it's the payment systems, whether it's CSDs, and the number of markets which are now connected to the global regulatory associations like ISCO, etc. So I think all of that is positive. But coming back to the risk part, I think clearly what remains is that from a portfolio investor perspective, FX liquidity, market liquidity, top of the agenda, strategic guys is on the macro issues. There's a whole lot of data. I think just in the interest of the time here, I'm just basically, these are the key messages coming there.
Yeah, but I think on as you said, there's a huge amount of issues, but I think that the last couple of years seem to have been reasonably positive, as you said, in terms of actually that the story, as we've talked about before, the story is quietly positive in as much as the fact that there is a huge amount of resiliency in the market, the fact, as you said, that things have really come on a long way in terms of institutional connectivity and so on and so forth. There's many of those things that actually, if you weren't paying attention to it, you would have missed. But ultimately, that they're things that just the fact that nothing fell over, as you said before, is a key fact. That ultimately, if nothing falls over, you don't notice it until somebody says, well, actually, the mere fact that it all kept going is a big deal, and counter to many people's expectations. So, John, I suppose, if you wrap all of this together, all the different challenges that, that we've had and all the conversations that you're having with clients every day, I mean, this stat about 24% of investors coming into Africa in 2022, and the future kind of outlook, what kind of sense are you getting from investors in terms of actually how the Africa story moves out from here?
Well, first of all, I think the survey is excellent, and perhaps I would say that because we were part of it, but just the interest that it's driven, right? And it's been very well received, the survey, by global investors. Both of you, Harry, yourself, and Barney, you've both touched on a number of points and how it shed light on an interesting shift, particularly by the European investors, to a more sustainable investment approach, which will continue to support the region's long-term growth. And as you say, in 2022, that percentile that are looking to grow their African investors just shows the interest just from North American investors as alone, as I referenced earlier. And I think just on reflection, the past few years have been challenging globally, but the study suggests institutional re-engagement with African investments, which I hope demonstrates the investment community is ready to really act on Africa's potential, which is incredibly exciting.
No, great. Well, look, that was a quick wrap up. Harry, do you want to close this out? We've got, I think, a couple of minutes.
Yeah, we just sort of out of the time. So I would just say that I've just shared the link in the Q&A box. So I encourage everybody to take a look and engage us if you have more questions, comments, feedback. And this is what we have shared is just only the high level findings. We are still in process of analyzing the huge amount of data and intends to come out with a detailed report in a couple of months' time, which obviously we'll share with the TNF community as well. And for today, thanks for joining us here. And Barney, John, thanks a lot for your time as well to join today. Great conversation. Thank you.
Thank you.
Thanks, Harry.